Hey everybody, it's been a very long time since I've made a video. I figured the best way to get back into it is just start talking about some stocks from this week or this month, just things that are fresh on my mind, and just go over things and just talk. It's not really going to be a direction to this video. It might be a bit random, but that's the only way I really know how to get back into this, is just kind of say what's on my mind, not be too organized, and just try to catch up, because there's just so much that I could go over, especially since I haven't made a video in months. So let's just get started with where I'm at right now. So I'm at 1717. Not as bad as my low. At my low, I was at 1670. So I've recovered about 47,000 of my, at my peak low. Still kind of chopping around. I'm still having the occasional very large red day, which I'm not liking. Just taking $20,000 red days as a kind of a normal thing now, I'm not really cool with. But that's what happens when you don't lock in profits. And throughout this period, I am taking the biggest sizes that I've ever taken. And that's not a bad thing. I think with trading, there's definitely periods of time where you might break even for a while. And it can be frustrating, but there is value in that experience. There's a ton of value. And I've been using historic size for myself, just some of the biggest sizes I've ever taken before. And I've been doing that on a regular basis this whole time. And it's kind of a powerful thing in a weird way. It's very good. It's a very powerful thing to be taking such large sizes. And the downswing isn't necessarily caused by what you would think. Really what's happening is I'm taking very large positions, and so it's harder for me to let go of those positions. It's harder for me to accept that the play is getting slow or weak, and then I have to let it go. And for whatever reason, the more amount of shares that I'm in a stock, I find it to be so much harder to sell it. And I just, mentally, I don't know why this is. It could be sort of fear that if I dump too many shares, I'm not going to get good fills, and that is true to some degree. Which is why, as you take bigger size, it's more important to actually scale out. It's more important to sell into strength when the strength is there, and put in those sitting limits to get the fill into strength and take partials. And I just haven't been doing that. And it's been a process because I've never had to scale out partials in the past. But as I gain more experience and with the size, I am learning, okay, I'm going to have to take partials. It's just something I'm going to have to do to make my life less stressful and be more consistent. And all I can really say is I have not been locking in profits at all, and it's been burning me very hard. It's been burning me hard. So I got to get back to that. As soon as I get back to locking in profits, this chart will be exploding up. That's all it takes, is for me to start locking in profits again. Now, I've been saying this for weeks, right? So there's definitely an issue, because I'm repeating the same thing over and over for weeks, and I'm not doing it. It's a big issue. It's frustrating to me. It's frustrating to everybody else, because you see somebody who knows what they're doing, who has the potential, and they're saying what they have to do, but they're not taking action and doing it, and that's very frustrating as a viewer to see. I would imagine, because I get frustrated when I see people doing that. You just want them to snap out of it, and do what they got to do and take that action. But with anything, usually it's time, right? Like, time heals most wounds, and I think just enough time has passed where continuing doing these flaws, and enough time has passed that I think I'm about ready to stop going for home runs, right? I sure hope I stop going for home runs. Yeah. I mean, this downswing here was just disturbing, honestly. And from peak highs, I was down 120,000 from my peak highs. It's not as bad now. I mean, I'm still $70,000 off the high. That's like 2 days of good, just very good quality trading, locking in profits. That's a couple days. You know what I mean? Like, literally, I could be at new highs in a couple days or in a week of trading, okay? And that's not me trying to force anything. That's just the reality. If I'm trading good and I'm locking in profits, the money just flows in. It just flows in. When will I do that? When will I start locking in profits? Gosh, I hope I start doing it soon. Like I said, using the money as a guide has been working a lot better recently than trying to play scales. And I'm going to show an example of this very shortly. All right. So first off, the market's on fire again. It is very, very hot. And all I can say is I hope I nail one of these. And I mean, this is just nuts. I do hope I nail one of these. How can I go about doing that, though? Basically, if you see things off scans, perk, and then kind of hold gains. I mean, at this point, you kind of just have to buy in. Especially something like this that was so kind of oversold, kind of consolidating there by one for a while, and then it starts to perk up on that day, and it's like, well, things are just kind of shooting up 2,000% lately, so buy them all. Like, that's kind of my take on that. You can see the day before it kind of perked, came down, held the next day and started finding uptrends, and then nice kind of just higher lows, and started to gain momentum into close here. And I guess right now swing trading is pretty good. I've said this before, a lot of the flows and the timing, it's actually weighted towards swing traders right now. It's a swing trader market. If you don't like swing trading and you don't, you might take some shares here, but then lock in profits here. That's a solid win, but we know these things are doing the same moves, so statistically, it's actually kind of better to just swing trade them. And then in the morning, there's a big surge to 7, pulls back, consolidates, obviously forms that nice setup that we like. Why I didn't take that? It's pre-market. I don't trade pre-market, but why not? Like, this is really great TA and really great volume, and this is the exact type of thing you would see on an intraday chart in the middle of the day. And it's high enough quality that, you know what, this is the double bottom. You can take some of these entries off the double bottom curl. You can take this breakout zone, and those entries are leading to insane moves. And if you look at the risk reward, it's more than proper. Like, it's fine, it's great. And that was just a really great play. And the fact is, if you wait till the morning open, you don't get a reasonable entry, you can't control your risk, and the play's gone. I mean, you can't play this. The only play here is to get involved pre-market at 9 o'clock in the morning, basically. That was the play. And if you miss that entry zone, you're done. You can't play it. And then after that insane move, it's like, yeah, you could dip by it, but really, you missed the easy layup, right? So I gotta get better. I gotta get better at recognizing when things are pre-market entries and just sucking it up and taking them. But pre-market is usually pretty obvious. As far as, like, you don't want to be playing low volume, speculative, choppy stuff. Like, this is very high volume. This is good structure. I mean, it's very reasonable structure where it's giving you those zones and then giving you the clear risk area. I mean, it's controlled. As long as something is controlled, you can do it. You know, as long as the structure's clean, you can do it. And a lot of these high quality plays lately, they've felt overextended, but the truth is, structured this clean, you can ignore how overextended it is because the structure itself is kind of suggesting that, no, I'm not overextended. Actually, I'm forming healthy bullish consolidation structure that you would expect to see before a continued run. So if those clues are presented, then you can take action on it. That's just what it comes down to, and I've been doing a very poor job of that lately. What do we got? Got Aether. I made some plays on this. Right. So I made a good play on this day. Now, the reason why I was able to prepare for that is because of this multi-day here. So this is what I was seeing. I had noticed Aether had held this $8 area for 2 weeks straight. And then before this run, obviously, I mean, I'm looking at this perk here on this day. It had come down, but I had noticed it had formed kind of, if I was to explain it, this is the bottom of this little spot here, of this micro consolidation. And this bottom is higher, so it's kind of a higher lows from this zone, if that makes sense. And then once it holds the range and consolidates for 3 full days, on the 4th day, you know, I'm looking for that breakout of this area so I can start sizing in to get that bigger picture move. And that was just based on this, the fact that, you know, at one point it was 1922. It washes for basically a full month. I mean, week after week, it's just washing. It finally found a horizontal, right? It went from being in a descending channel to horizontal. That means it's different. That means it's finding a bottom, and it might bounce off that bottom. So that's why I was watching it. Now, to be honest, I really actually expected this to have a stronger bounce. I thought it could go to 12. Really, I thought it could go to 12. And it just didn't. It just didn't. So I had really high hopes, actually. So I think my entries were just in this area. No. I think this area, perhaps. I was kind of looking at this, and I'm like, okay, VWAP I think was in this area. So at this point, it's over VWAP. It forms that kind of double bottom feel. It's kind of like a very micro wedge with a double bottom. And I'm just scooping. I was just scooping some shares off this dip. I saw it, it's like, oh, that's pretty. It's testing. I saw it hold, and then once it held that second bottom, I went ahead and just bought more shares. I'm just sizing in. This was very healthy consolidation, and then it goes, and then I get that really strong move. And this is kind of, this is what I'm kind of frustrated at myself for. I think I had 25,000 shares at 840. Why am I not selling it into this push? I mean, that's $15,000, I believe. Why am I not locking in $15,000? It's kind of it's I don't even have words to describe it. I mean, it's really bad. It's very, very, very bad. Now, yes, I did end up selling it at 950. Okay, I held that position all day, and I sold it at 950. Essentially, I had seen almost, 75% of my profits come back down. And I was just, again, I keep saying this in real time. I'm like, wow, I did it again. I didn't lock in profits. It's coming down on me. I did it again. When am I going to lock in profits? But it holds and finds an uptrend. Okay, comes back down, holds this luckily, and then continues. And I get a reasonable sell. At this point, it's like, okay, I had this nice run. This is what I would think of as the re-entry. It's a structure right here. It's this double bottom structure. It's a higher low on this time frame. So what I should have done is lock it up here between 9 and 925, because that's around $15,000. And then later in the day, when it washes out, I can analyze this and I can start taking the re-entry. And I can probably get in, another 20,000 shares at 890, sell it at 950. That would be an additional $12,000. Not only would I have made $12,000 more dollars, I would have avoided the risk of this $15,000 play coming down back to nothing. And even a loss. I could have taken a loss, because that's what is happening to me lately. If you lock in profits more times than not, you'll get some consolidation, and you'll be able to get the re-entry later, and you'll be able to make even more profit. Or if you think it's a good play, once you've locked up 15,000, well, guess what? You can definitely justify taking some of these nice dips at former support if you are very confident. Because look, if you take dips as support and you're wrong and you get burned, you can't really feel too bad about it, because you sold up here to essentially hedge your bet, right? Like you locked up 15K specifically so you could take a little bit of a higher risk kind of dip buy as a re-entry to hedge your bet. And if you get burned on that, okay, then you think of it like, okay, I lose some profits back from this run, but overall it was still a great trade. It was still a good process, right? So you can definitely do things like this, and that's what I need to do, and that's what I used to do, right? I used to lock in profits and then just play it again later in the day, make another fat profit. When did I stop doing that? I stopped doing that when I started to take massive positions, like 25,000 share positions. I get too attached. It's like, it's this weird thing. I'm attached to the position because there's something that just feels great about being in a large position and just watching it go up and just wanting, you have such a good average and you just want to let it roll and you want that trade to be huge. And that's really unhealthy trading. But that's the emotions that have overcome me as I'm taking these larger sizes. I think in general, the scaling up and the experience that I've gained with that, I mean, it's been great. It's been really, really great. I'm glad that I've done it. It's increased my variance, but only because I'm not locking in reasonable profits. That's the only reason. If I just lock in profits again, I will have the biggest upswing I've ever had. I know it. I know it. I just got to get back to locking in the profits. Like this day, for example. So, I saw this kind of wash. Okay, it's reasonable. You know, it was like holding this average, and I'm seeing it starting to hold kind of above the average. And that's when I started to take some positions. When did I take that? Actually, I wonder if I could... Let me see. So this is on 1020. Right, so I was scaling into the 930s on that higher low. And then I took an ad here at 965. Yeah, so it looks like I did scale in right here. And that was just because I was looking at this view. I saw that low come in, and then it started to shift up. And because it had held the average and VWAP so well, I thought it would have a nice day too. And my thought process was, you know, and especially because if you look at the average, it has held its gains from the day before. So that's a horizontal hold of gains through all of that time. And I'm just taking kind of this micro triangle setup. So I bought in the majority of my shares at 930, although I did take an ad here on this setup because I thought this was just like such a clean setup, kind of just using the average there, and as it starts to curl, I take this 965. Look, it was a nice ad because, I mean, generally speaking, it had kind of washed. It kind of just, I felt like that structure was so clean. But it does kind of beg the question, like, why there? Like, why choose to add at 965 when you could have added here at 940? You could have added here at 949. Why wait till 965? This is just not a good ad, really. I don't like it at all. Like, I've been doing that lately. I don't know why. I'm just adding at really high spots, and it's not necessary. It's not necessary. I don't like it. I mean, it was a decent ad spot. A little late though. I would prefer I don't do that. Anyways, I didn't lock in my profits. It got all the way up to 10. Look at where I sold it. I sold it at 950. That is so depressing. Look at where I sold it. See, this is what I have to stop doing. I need to lock in reasonable profits. I was up, I think, around 10 or 20,000, and I let it come down for like $1,000 win or something. I have no idea, but the point is, why am I doing this to myself? By the way, this spot is absolutely no different than this spot. The only difference between this spot here and this spot here is that this held the dips and found new highs, and this one didn't. So statistically, you can clearly see why it is so important I lock in reasonable profits. Analyze it. If it proves itself that it can hold gains and form a redevelopment, then you take an additional trade. You have to lock in reasonable profits and then see if it holds reasonable gains for a re-entry. Let's say you want to take something speculative like this because you did lock in those gains. So this is kind of like a dip buy as a hedge. Like I said, you can kind of afford to be a little more loose when you have a lot of profits on the name. I'd say you do something like this, where it's like, okay, it kind of holds this zone. Maybe I'm going to take this curl here and see if I can get, some holding formations and maybe to kind of retest the highs. And you know what? It doesn't do that. And it starts to come down and get weak. So worst case, maybe sell a break even. Best case, you're sharp and maybe sell it on that weakness and lock in some profits. Yeah, it's just very clear what I'm doing wrong. I'm holding too long. That's it. I'm holding too long. There's no other way to put it. Simply holding too long. And I didn't play it on this day. Yeah, it's just frustrating. And a lot of my trades, it just doesn't need to be like that. Like this ear trade. This was a dip buy. So on the long-term chart, it's down a ton because it had that really bad PR. But, with bad PRs, it doesn't make me too afraid of the stock because if it gets washed out enough, it can have some really nice bounces. So you can see the volume is completely washed out and it made this kind of spot here. Now, I did play it on the 13th because of this. Okay. Now I'm curious if I can get this. Did experiment with Trader TraderView a bit. Although I gotta say, I'm not really too impressed. It's probably my own fault, but I don't really like how the data gets entered in. I don't know. I trade too much, so it has a hard time accurately displaying my trades and my profits and stuff. It's very inaccurate. Okay, so I wish it showed how many shares I bought. Maybe there's a way to see that. I don't know. Looks like it was probably 15,000 shares. Probably 20,000 shares actually. Yeah. Right. 40,000 shares traded, so 20,000 shares in, 20,000 shares out. So what I was doing, I was uncomfortable with this price action because it was kind of illiquid and slow. I wasn't sure. But then in this area, it started to get, the action started to ramp quite a bit. And the day before, there was a different biotech company that had a really big run. What was it? I think it was Bio. Yeah, it was this one. It was NRXP from the 12th. So this is one day before. And it went from 670 to 1110. And it was just a biotech company on a dip. So dip, it bounced, huge bounce. So I don't know, I just felt like even though they're not related really. I mean, this is medical devices, this is biotech. I mean, it's really not related, but I just figured, hey, bounce plays are kind of working nicely. I'll give it some time, see what I can do. Looks like I did a reasonable job on this. It's kind of in this area. I let it consolidate and just see what happens. And it got weak, so I cut in this area in the 720s. So I had the 6 to 80 centuries and got out of 720. So I made 6,000 or so, I don't know. Again, I have a hard time analyzing off of TraderView. It's like so inaccurate. Like I don't know what's real, what's not, what's accurate. It's just, yeah. So you know what? I traded that quite nicely. The only really critique I have is I definitely could have. I mean, if I liked the multi-day and I was prepared and looking at it, which I was, I could have taken kind of this double bottom feel and just took a starter at the 663 area. Could have certainly done that to get a better average. Would have made the play a bit better. I don't necessarily love the 720 sell too. It's like, again, if I'm working on locking in profits, I should just have sitting limits as it's testing that $half area. Especially this. I mean, when it goes from like 740 and it slams back down to 730, I mean, I should just be, by default, I should just be getting out. Like, I should have just gotten out at 730. And the reason why I say that is because what I've noticed recently is if I don't get out at like the, when things dump and I'm up a ton of money, it's like, okay, just get out before anything bad happens. And the main thing the main bad thing that happens is I get attached to the trade. So I was very disciplined on this particular trade, and I sold it at 720, and it wasn't that bad. It was very reasonable. There is situations where I lose my discipline and really kind of lose my mind, and I don't sell it at all. And I will let it come down on me for break even or a loss. This has never been an issue for me, ever. Ever. I have no idea why it's an issue for me now. I don't know. I don't know. I used to lock in reasonable profits, and now I'm just not. I'm not. Alright, so the 14th, let me just look 15th day. Interesting. Right. So then I think I tried to play it again on this day. Okay, let's look. Oh my. Yeah. Yeah. And that's what I was talking about. So I took an $800 loss on this. Wow. I had sized in here. I believe I had 15,000 shares at 735, and it hit 775. I may have even had, no, I had 20,000 shares. Oh my. So look, I had 20,000 shares. I was up $8,000 here. I don't mind that I didn't sell it. Okay, but why am I not selling it here? This is a must sell. It's proven. It is breaking to the downside. It failed to hold and continue. It's a sell every time here. Like I could at least lock up $5,000 in this area, and it was very doable. I could have gotten out easily. I chose not to though. I hung on. And I ended up selling it here for an $800 loss. That's not okay. That's not okay. That's just not okay. I mean, imagine this times 20 trades a day. Maybe not 20, but you get the point. Like 20 trades a week or something. If you make $5,000 mistakes 20 times a week, that's $100,000 of equity just gone. And not just that, you're taking red trades on those now. Right? And I've been doing it constantly. Yeah. Definitely probably played it the next day. I mean, I don't want to go like day from day to day, but I mean, it does break down here. And at that point, I was checked out as far as like, yeah, okay, it's breaking down. I guess it's not gonna have that big gap to fill bounce that I thought it could have. Oh, okay. But it did hit scans, and I did notice it perked the next day, and that's when I told myself, well, okay, I definitely need to keep an eye on it. And on this day, I didn't play it at all, but it had definitely had a nice run. And something about the way those candles chopped and looked and felt, I just wasn't comfortable, and I didn't trust it anymore. So I didn't touch it, but you know, I was certainly aware of what was happening, which is the breakdown. So this is kind of like a false breakdown because it recovers the range right away, and now it's testing the key levels. And not just that, I notice it holds kind of above the main consolidation. So now it's hovering above it. The next day, if it can hold and then start an uptrend, well, look at the long-term chart. Oops. Look at the long-term chart here. Get a situation where if it curls and has a nice multi-day breakout, you get this gap to fill from the initial gap down. If it gets over 870, who knows how high it could go. These are rare situations where, I mean, I've seen them go to 15, right? I've seen just absurd gap to fills. I'm basically short squeeze, you know. This one didn't go as high as I thought it could go, and it failed to have a day two. Yeah, I'm not really sure why. Maybe the software, the internet companies, software, those things are obviously going parabolic and just exploding. I think people are basically just paying a lot of attention to that stuff and kind of ignoring these kind of medical device, biotech, you know, it's kind of, they've cooled off as the other sectors are just exploding. Everybody wants to get in on those sectors and kind of ignore things like this. That's kind of my take on it. Whether that's true or not, who knows? But yeah, so that's definitely. And again, I didn't really take the action that I wish I would have taken. You know, I certainly could have taken a starter in the 750s here. In this area, I felt it was too slow for me to really buy in. But at this point, you know, this is really what I was looking at, this triangle setup. And it's a hover right near the highs, and at this point, of course, I'm fully aware of the long-term chart setup and the multi-day breakout. Like, I mean, I have to take action on this. If I don't take action and I miss a big gap to fill play on something I camped for weeks, I'm gonna be so disappointed in myself. So better late than never is kind of what I was thinking. At least I had some type of formation to base a risk off of. It proved it held and it was starting to perk up, so I was just sizing it. So I took, 27,000 shares. It's debatable whether that was good or not. It's like that's a lot of shares for a top of range entry. I really should have been sizing in the 750s. So again, just not the best entry, honestly. Yeah, no, not the best entry. Even this type of entry would be better. Something like 788 off of this pullback. I mean, if you honestly think it's going to be a gap to fill crazy play, and this is, if you miss this kind of entry, then you can definitely start getting in there and just risk this low. Very, very reasonable. Start scaling in here. Man, my entry was, I don't like it for a full 27,000. I like this spot for like maybe a 5,000 share ad, maybe 10,000 share ad, but not 27,000 shares. No. I do get a nice perk to 823. It did pull back for a moment right to my entry, and I was not loving it, but I definitely wasn't going to sell. You know, the risk was clear. 805, basically the break back to 805 or under it would have been, you know, I have to get out, but it didn't, and it held, and then the trend started. I couldn't justify selling it in here, and I'm happy I didn't, because, you know, if the potential is multiple dollars a share and the market's hot and things are moving multiple dollars a share, if I get in at 810, I'm just not selling it here in the 850s or 860s when things are just too hot. And I would have been okay with that. And if this starts to break down, I have to get out immediately, and I would have had to cut. Now, would I have? I don't know. Part of me thinks I wouldn't have, honestly. Part of me thinks I would have ended up getting out break even if this goes against me, because I'm just not in a good mindset right now. I haven't been putting in enough work. I haven't been doing these videos. These videos are powerful review when the market's closed. To just brainstorm and think, it can be incredibly powerful, and I just haven't been doing it. I think a part of why I haven't, it's kind of, you know, when you get into a bad spot or bad mindset and you start making, you know, being a bad example for people, kind of just want to hide. You know, it's like, dang, I did so good for so well, and now I'm kind of just trading like a moron lately. It's like, dang, it's kind of sad. I mean, I feel embarrassed, honestly. I'm just not a good example for people anymore, and I hope I can get back to doing the right thing. But it's hard. Really is hard to come out and show yourself after struggling. You know, part of me just wanted to wait until I get things under control and get back to new highs, but, you know, the more time that passes, the more clear that it becomes that that's just not going to happen, you know, unless I start reviewing again, unless I start putting in the work again. It's just simply not going to happen. So yeah, that's what I'm doing now. Making the videos, reviewing, trying to get back on the swing of things. Right, so this has a nice continuation. Something to note, I mean, if I wasn't in 27,000 shares, this is a great ad spot, truly. It truly is a great ad spot. If you miss this run, this is an appropriate entry because it's super clean. It's completely washed out. It's a great continuation setup. You can get in with a controlled entry with a very controlled risk. That's a great trade. It's a great entry. And it has this run to 950. This is when I get very upset with myself. Okay. This is absurd that I didn't start to scale out in the 930s, 940s, 950 and just get out completely. Like I said, what can things do? They could run multiple dollars a share. What should I do? Because we're in a market where it's like a swing trade market. These things are chopping around for multiple days. They're doing weird gaps overnight on news. Just weird, slow, but very hot. Very strange. Very strange. For biotech at least. And I don't really know. The point is just I want consistency again. I want to lock in gains when I'm up a lot of money. You look at 950. Okay. minus my entry times 27,500 shares. I was up $38,500. $38,500. Why am I not locking in that gain? Because it comes all the way back down to 878. And then what's worse, if it cracks and breaks down, I might get an 850 sell. Okay? That's absurd. That would be me giving back $27,000 of my profit just because I didn't lock in reasonable gains. And you already know what I'm about to say. You lock in a nice 38,000 play. Okay, cool. Now watch it. If it forms a re-entry, you can take it. If not, whatever. Right? But look at what it forms. Very tight, clean, controlled wash. Very nice setup for a re-entry at 890. I could re-enter my entire position here at 890, risking something like 882. That's $12,000 of difference, or even more. This is what I used to do over and over and over and over. I would lock in the reasonable profits. I would let it wash out, and then I would just take the re-entry for another ridiculously great play. And somewhere along the line, I stopped doing that. I want to make it really clear. Me holding this entry all the way to this spot was really bad. I do want to also note that I did have, on this initial $10 breakout, I had my sitting limit was in at that point. I had it in at 1038. So my sitting limit was at 1038 right here. It didn't hit it, and then it kind of got sucked back down, and I'm just thinking, like, what if it does one of these, like, gets over 10 and then it gets sucked back down and shoots down, right? I kind of panicked, and I did dump my entire position just out of panic, because I basically came to my senses, which is I held on when this got sucked back down under 950, and it shot down, and it didn't recover really for a long time, and I just felt like if I do the same mistake here, I just won't forgive myself. So I dumped my entire position. And this time it actually held up over 10 and got to, got to 1064. So I didn't necessarily do the best there. But at least I came to my senses and locked up a reasonable profit. I mean, can you imagine if I would have said, you know what, screw it, I'm up so much money, I'm going to hold this as a swing. This probably was going to have a day 2 and probably gap and go to 12. I'm going for it, whatever. Then the next day comes around and it opens super weak, and I get into this mentality of like, oh, I'm sure it'll bounce, like I just have to hold on, and then before you know it, I end up selling at something like I end up selling it here at like 827 or something. Lose back 90% of my profits. Like, this is real things that can happen to a bad mentality. Or you might swing and it might get awful news and gap down to 7. Right? These are things that are going to happen to me if I continue this trend of holding to infinity. It's not good. It's not good. Not good at all. And but that's why I'm talking about it in this video, and why I'm repeating myself over and over and over. Gotta start the healing process. And to do that, you gotta be open. And sound like a broken record, really, most of the time. So this is interesting. So Grom is internet content and information. It was one of the first stocks from that sector to explode and ignite. Now I had seen it, and what I noticed is it had this price action. Nothing you would notice, right? Nothing you would pull up and notice. But when it goes from 180 to 195 and perks like that, and then it starts to consolidate and hold, it gets my brain turning. And if you look at this volume, I mean, it's pretty substantial. I mean, this is some pretty good volume for just a perk. Okay, so I'm looking at that long-term chart, and what I saw, is it was up at 5, it pulls back. I feel like there's more history to this. I feel like on my E-Trade it showed more. Maybe I'm tripping, but I swear. Yeah, no, there's definitely more history to this. Certainly. So basically, I just saw that it was a big former runner. Maybe not even a former runner, just the fact that it was so oversold, from 80 down to the 170s. Why does this show 0.03? What is going on? Weird. You get the point though. It was oversold. It's basically a bottom bounce play. I had seen it had made runs in the past, and that's why I went ahead and took a shot at it. Sorry, trying to find the right thing. So I actually took 5,000 shares at 195. I thought I had 10,000, but then I did have 10,000, but then I sold back half for some reason. Just like I sold half, and then I was realizing wait, what am I doing? I have to risk 187. Why am I selling? I sell in kind of like blocks. So I sold half and then realized it was a dumb sell, and then just held half. And then it started to go up. And I knew because it was a bottom bounce play that I should just give it time. But I freaked out and sold it at 240. I locked up $2,000, and then it ran to 670. So I felt really stupid. Day 2 consolidation, I just ignored it. Day 3, I was watching it closely, but it opened weak, and then the candles were super weird, and I just never really liked the feel of it. Or I may have taken this, because sometimes lately they've been going under VWAP, forming that entry, and then finding that big picture kind of uptrend and then breaking out. So I definitely took this and got out for a loss. But that thing happened where it shows something, it breaks down, and then what I noticed though is when it broke down, it was able to bounce back, and basically for 2 days straight, it was retesting this kind of recovery to get back into the range. So I was thinking of it like a third day surge setup at that point, because I noticed the volume, right? The volume got completely washed out to the point where, okay, the next day, this is either going to break down or it's going to explode back up into the range and probably retest. So I was sizing all into this 330s, 340 area, just on the different micro setups. Like as this micro setup, I would take some shares. Definitely kind of on this kind of wedge, I took my initial entry. And it just started uptrending, and at that point, it's like, okay. The first day it ran, it took a while to get going, but it eventually curled and really, really exploded. So I'm just going to give it some time. And I held on as long as I could, but I reached my breaking point at some point. It was basically testing 450, and then as it tested 450, a big kind of sell wall appeared or was there, and it just felt like, why is this not exploding? And for 5 or 6 minutes, it just couldn't do anything. And so I mentally broke, and I sold my entire position at 440. It was a great play. I made $15,000 on that. So look, technically, this is what I want. I want to lock in reasonable profits at reasonable price points, and I think I did a good job. $15,000 on a play, if I could just stick to that, I'd be in a much better place right now. Yes, this one ended up holding and then exploding, and if I would have just held on a little longer for that scale to play out, I would have made 30 or 40,000 on that. But you know how many times I'm up 15,000 and let it come down on me for zero these days? Too often. And I don't want to do it anymore. So even though this one worked, I'm tired of holding for this move, and I need to lock in this move over and over and over, because they're just coming down on me too often. Just can't do it. I didn't play it on this day. It's just too choppy for me. Yeah, basically after that run, it's been difficult to play for sure. But you can see recently with the sector igniting, it consolidated a bit on this dip. Right, so it was in a descending channel, and on this day I was anticipating that it was going to break out of the channel and have a nice explosion back to the $5 area to retest. And this brings me to a very, very painful trade. So it was a bit kind of low volume and choppy. I wasn't sure if I should get involved here. But once it explodes and forms some more volume in trading, I was a lot more comfortable. So in this area, this is where I was taking size. Just in this area and here and here. So my average was 30,000 shares at 383. Anticipating a $1 a share move. Everything's going good. Consolidates as I would think. It starts to break out. It gets over 4 just as I would imagine. But the reaction to 4 was very weak. And then it doesn't flag up as a bullish stock should. It goes down. And instead of cutting it here, saying, okay, I'm not going to make 30,000 on this, but you know what? I can sell it, I can be safe, and I can lock up $3,000. Instead of doing that, I held on and I hoped for the best. And I ended up selling it at 352. Right here. One of the worst trades that I've ever taken in my entire career. I lost about $9,500 on this trade on something that I would normally easily get out in this area, or at the very worst, get out in this 387 area. And for whatever reason, when I take a very large share size, I have a harder time letting go. And I don't know why. But I need to stop. This was a very, very disturbing trade, because I've never just let something run against me for this long, ever. I've never done this. And it's just shocking. It's just quite shocking. I thought at the very least, it would do something like this and then maybe bounce back, but no. Why not? Why avoid all that? Just avoid all that stress and just cut it when it shows you it's weak here, get out. Protection over profits, right? When did I lose that? Gets an after hour PR, perks a bit, then the market explodes, goes crazy, and then this nice formation. I had seen it. It was testing the horizontal, and I saw it basically break out, or testing the breakout of this channel in pre-market. And I knew I should take some shares, but I didn't. And then I went from 390 to 570 very fast, and I'm sitting here like, oh, great. I went for that move yesterday, and I lost $9,000 on it being stubborn. Okay. And then out the gate, it just starts uptrending, goes into a halt, and has this crazy move to 7. I didn't play it at all, so. Didn't play that at all. I did try to take a dip buy in this area, and I started playing it like a complete moron. I saw this consolidation. I was sizing in this area. Just started chopping, just all in this area. Started chopping in and out. I took probably $10,000 of loss. I feel like maybe $5,000. Something really bad though. I wasn't gonna give up on it though. I just knew I needed to slow down. So in this area, this is when I saw this happen. So this was kind of like, it's not a perfect double bottom, but it's kind of, at least it was able to hold kind of this from the morning, and it was able to hold that zone and then recover the range. So kind of a false breakdown, recovery of the range, and then I thought, okay, it's gonna have the bounce now, I bet. So I started to size in, took shares here. So I got in. What was my average? Right. I had 45,000 shares at 410 average when it was all said and done. 410 average, 45,000 shares. That is a lot of shares, isn't it? I had a sitting limit at 538. Why? I don't know. I just chose 538. But time of day matters, and when the bounces start kind of late, like 320 is pretty late for a bounce to start. The best bounces always start in the 1 or 2 p.m. area, because then you have time for it to curl and trap more shorts and then explode late day. And this one didn't do that, so I kind of already knew it was a bad idea to go for, anything huge. I'm just so disappointed in myself. Yeah. I don't know what else to say. I mean, it's just really disappointed in myself. Because why am I not just locking up dollar a share with 45,000 shares? That's $45,000. You would think, hey, maybe I would do that. Maybe I would just put in 5 or 10,000 shares just to get start scaling out or something at 510, just something. And I don't. And then it gets sucked back down and it feels very weak. It feels exhausted. And I'm just sitting here thinking, oh, okay, I hope it goes up to continue. And it doesn't. It slams. And then I'm sitting here thinking, wow, I really just wish I sold it at 510. Can I please get that price back? And it's not going to do that. Like, once that strength is gone, it's gone. And you have to get out. And I should have just started getting out at the 580s, at the 5... Like, I should have started to get out. And I didn't. And I ended up getting out at, like, 451. I gave back $20,000 of profits just because I didn't lock up a reasonable profit. That is really, really just pathetic. And by the way, it was at 435, and if it decides to flag down again, guess what? I would have sold it at 420. So I got lucky to even get the 453 sell. Really? It should have gone back to 420. It could have panic dumped even back to 410. I could have lost everything. All because I didn't scale out. All because I didn't lock in reasonable profits. That's so gross. And that is just... I just wish I could get it together. I need to start locking in profits. That was $45,000. Why am I going for 538? Why? I mean, a surge there would have been cool, but why am I going for that? Why not just lock in a dollar share? I just don't like how I'm trading at all. I don't like how I'm trading. But again, that's why we look at these things. That's why we analyze and look at these things, so we can hopefully get better. NRXP, I just basically just took I think it was a reasonable entry. It was definitely late, but reasonable. Kind of frustrating because I had seen it. I saw the long-term chart in the morning, and I said, wow, this thing is from a runner. It can definitely bounce. Let me see what I was looking at. Right. So I got in late at 758, and that's why I got spooked out. And I cut it at like 753. And then it held and just ran forever after my sell. So that was cool. Obviously, the better thing to do would have been to buy kind of this hold, and then as it comes up, buy something like the 734, or as it surges up and back into the horizontal range, holds for 2 minutes, and then flags, you take that at 748. That's the two entries that make this manageable. My entry was late. It was late. 758 is an awful fill. And that was high enough to make me mentally get shook, and I sold it, right? So, yeah, gotta be a little bit more precise, because then it's like after I let myself chase something like that and take a $250 loss, then those emotions come in where I'm kind of spooked, right? If I just don't chase and I just stay logical, that's a nice triangle setup, 3-minute flag setup. Take it at 762, risking 757. Hey, look, that one works great, right? It's whenever you get emotional and chase a run instead of waiting for precision, that's when you get into trouble. That's when you take a $250 loss on something that should have been a $5,000 or $10,000 win easily, right? And then in this zone, I mean, I think it's reasonable. I mean, there's way better entries, obviously. I mean, just this alone. Double bottom comes in, wedge. It's pretty clear. I mean, you can take the 853 entry, risk an 846, and let that roll. And that's not bad. That's not bad at all. Now, really, I would probably end up selling it here because it's like, okay, just had a new 5-day breakout, but it doesn't feel strong, and then it's coming down. But still, that's 50 cents of upside. That's still a reasonable play. Let's see. And there is this one. I mean, let's say you missed the other entry. Yeah, there is this one. If you get in at like close to $9 area, goes up to 932, and then as it comes down, like, yeah, I would probably get out of this break even. So that entry zone probably wouldn't have worked out very well for me. And the one I took was this. I took, if I can zone in a bit. So I had seen it tested this high, and then it came down. Formed kind of this wedge looking thing, and it surged right back into the range and started consolidating. Now it tested the high again, and it came down. It tried to crack. It tried to basically get rejected, but then it surges right back up into the range, and I'm kind of thinking of this now as it's kind of like a 3-minute flag setup. It could get over that high and then just start uptrending. And because it's so oversold and it is a big former runner, hey, maybe it has a big short squeeze and makes a big run. So I go ahead, I take 10,000 shares at 930, this 931 area. Basically just willing to risk this 925 type of area. Because I was entering that 3-minute flag, it just kept going up, and I didn't have really any pressure. I was in a good spot. And it starts to hold this higher range. I'm comfortable watching it closely, of course, but I'm comfortable. And it uptrends nicely. And it gets a 10, right? Now, when you're taking late entries, you really shouldn't go for home runs. You really shouldn't. You just shouldn't. I mean, it's a late entry, which means you're going to be put to the test on any chop. And just comes down to the same thing, which is I'm up $7,000. Why not lock it up? And if I don't lock it up there, okay, again, at the very least, why am I not just cutting it at 970? Say, okay, $10 got rejected. I gave it some time, but it's clearly descending now, and I don't know what this is gonna do. I should be selling it around 980 or 970. That's what I used to always do. At least that's $4,000 or $5,000, right? Like, at least it's something. Instead, I ended up selling it at the low. I sold it at like 928. And I think my entry was actually something like 934 average. So I mean, I took a $500 loss on something that I was peak upside. I was up $7,000 on. Again, do that 10 times a day. Or do that 20 times a week. That's an extra $10,000 of losses on $70,000 of equity. Or whatever. You get the point. It's like a huge error. It's a huge error. It's just not okay. It's really not okay. And then in this area, what you end up getting, this bottom and this bottom. Once a double bottom comes in, then it's safe and proven itself for a re-entry. Then I can take the re-entry and nail it for another play. And this time this was explosive, so I could have given it some time, sold on this weakness. 1050 sell. That's 980 entry, 1050 exit. 70 cents. That's another $7,000. So instead of making, 5, 10, 15,000 just playing the run logically, I played it emotionally, like going for some home run play, like just trying to hold in hope and just. And what was the result? A $500 loss. Instead of just nailing it, staying logical, re-entering, nailing it again, making good money. Less is more in this market. You go for less, you'll make more. Because it's so choppy and so unpredictable. You lock in the run for a reasonable spot, especially when it shows a weakness. You might not sell the top. That's fine. I need to be okay. It's almost like with the sizes I'm using, I'm up a ton of money, let's say, when it searches a 10, I'm up a ton. And then it quickly kind of gets weak, and now it's at 1080 or 980, right? And then it's like, well, wait a sec. I was just up $5,000 more at this spot. That hurts. The bigger share size makes that number difference a lot bigger, and it's affecting me mentally to where, wow, that $5,000, that's a lot of money. That really hurts. Let me just try to get back to that price. Let me try to get back there. But the reality is in trading, once something confirms it's weak and starts a downtrend, it will never go back there. The only way it goes back there is when it has these big tests. What are the big tests? The big test is a really harsh breakdown that could have went way lower. It could have broke down and surge rejected back to 880 or something. That can happen. That's scary, and I'm not willing to hold through that. Which means that when it gets weak and confirms that it's going to start a downtrend, get out at 970. You can always reanalyze and get back in, and not every play is going to be straight up to the moon play. They're going to be choppy, they're going to be hard. So lock in the predictable, safe plays that they give you and be happy with it. And I think I've lost sight of what's actually important, and it's unfortunate. This spot was very unfortunate as well. So this is where this was my first entry of the day on the stock, 935. I took that price, simply put, look at it, it had pulled back, but it had held this support from the day before. And this is a double bottom at this point. You get this bottom in the morning, you get this bottom. right? So you get this bottom and you get this bottom. So the idea is it's going to break out of this triangle setup, and then it's going to curl. It's going to explode for a continuation, go to something like 12 to kind of fit the scale. And that's what I was going for. That's what I really thought was going to happen. I scaled in huge. You know, I had, I believe, 25,000 shares because I did take an ad here. And I had even kind of taken a small ad here and a small ad here, anticipating that this is going to then, you know, wedge and have just a huge kind of red to green breakout, just big move, like this exact move. I thought it was going to happen here because that's what I've seen in the past over and over and over. But it doesn't. It doesn't. And it breaks down. And the only thing I would say is I at least can't, you know, at least I was somewhat sensible this day and I cut it at 970. I think overall it was like $5,000 or $6,000 of profit. And again, I played it excellently. I did great. I did great, you know. And I just wish I would show up and trade this good every day. Or I wish I would trade every stock this way. I played it very reasonable. It didn't break out, right? It didn't explode. I don't think selling it here would be good though, because these candles are consolidation candles. It never truly started to work. And so I don't feel bad for not selling it at 10 because again, if it works, I get 11 or 12. I definitely don't feel bad for that. And I did great selling it when it got weak and confirmed that it wasn't going to work today. Amazing play, really. So I like that a lot. And then the following day, I was going to watch it for the day 3 because, you know, it's like, okay, well, it could have a day 3 where it'll break out of this downtrend and then explode up and fit the scale, you know, and kind of go from that. So it went from 7 to 10 or 11. So you should expect 3 or 4 from this 950 area. They dropped the PR in the morning, and it sent it, and just so unfortunate. I would have rather it not gotten the PR, opened, consolidated, formed some entry zones, and just gone up naturally. Or maybe, you know, I would have preferred, of course, if they dropped the PR kind of in the afternoon, an afternoon drop, W key style. But, you know, pre-market real early. Dropped it even before 7 a.m. So, yeah. It's just really unfortunate to see this because I was sized in enough to where if I got the explosive move the day before, I mean, I would have made 100,000. And to see it happen pre-market when you're not in, it hurts. I'm not gonna lie, it hurts. I think I dabbled with it a bit. Pretty much break even. I mean, I got kind of beat up on it a couple days. It just got slow and choppy, and really at this point, I'm done with it, you know. It's just not it. It's not it. I think it's over, so unless it gets another PR, I'm probably just done with it. Yeah, there's just a lot. This one bothers me a lot. So the idea behind SONM. So it's a hot sector, communication equipment. It kind of goes, you know, it's kind of a hot sector with You get the point. Just super sold off stock. It just had a reverse split. This is the exact type of pattern that's going from $2 to 20. I mean, it's the exact pattern. I had seen it perk after hours. And I analyzed the long-term chart. I analyzed it that it just had a split. And I said, I have to buy this. I mean, I just have to. And I bought in heavy. I bought in 22,000 shares, an average of 205. Starts to make a nice run. Now it gets to 234. So at one point I was up like close to $7,000, and it comes down hard. This was not fun, but I held, because this market is so hard, because these things are chopping so crazily and they're coming back down to support, and then they're just flying to new highs. This one didn't fly though. It just sat here, and guess what? It was Friday. I'm busy Fridays, and I had to go at 6:30. I had to. When I'm sitting here at 6:30, my thought process is, yes, it will probably hold. It'll probably even uptrend before close. It's probably a swing, but what if I walk away? What if I walk away and it sells all the way off to like 185? And I'm down like 4,000. Like, I just couldn't do it. What I needed to happen, I needed this to start uptrending in this area for me to just kind of walk away and say whatever I'm swinging in the next week. I didn't swing it, obviously. I sold it at 208. Yep. Yeah. So, small win, irrelevant really with the sizes that I'm taking, and it runs to 247, and this is just an easy hold, and I'm sure next week it'll gap up and probably run to $8. Just another spot that I probably just threw away $80,000. I'm doing this so often. It's like, for plays that haven't even begun yet, I'm selling too soon. For plays that have begun, and really I need to start getting out and completing those plays, I'm holding on too long. And it's like, I'm having a hard time getting the balance between a good sell and a good hold. And the timing is so hard. Like, this is such a good entry and such a good solid play. But the timing is, you need to basically just devote your whole Friday to after hours. And it's like, do I just say whatever and walk away and hope for the best? Hope it doesn't crack down on me? That seems irresponsible. At the same time, these things are perking after hours and then running 2,000% the next day. So there's $80,000, potentially even 100,000 plus of upside on my position. Shouldn't I just say screw it and risk the worst case scenario, like $5,000 loss on something that can provide $100,000 next week? I'm disappointed in myself for not holding that. It's gonna hurt so bad when I wake up to this and it's at $10 a share. It's gonna hurt so bad. Know what else hurts? This hurts. Because I had 40,000 shares. And I had bought 40,000 multiple times. So let's just take a look at that. Yeah, this is why I've been putting off going over trades, because I've been trading so bad recently that I just knew that it's just going to be so painful to analyze this stuff. But I have to, right? Like, you have to feel the pain to get better. And that's why I've been doing so bad lately. It's because I haven't been analyzing these things in videos and kind of just going over the pain and accepting it. So that way on future videos, I don't have to be in pain. I can trade better and improve. Trade review mark. Okay. Beautiful. Beautiful. So look, I knew Mark was going to run. I knew it was going to run because it is internet content and information. It's a 99 mil float, and the hot trend, for whatever reason, bigger floats are hotter than lower floats right now. It is a big former runner. Okay, it's very sold off, and if you look, it is capable of making big runs, and it is very sold off, right? So, and look at the tight consolidation in the past, led to a 44 cents at 340 move. Now look at the tight consolidation right here. This is exactly the TA that we look for on intraday charts, and it's perfect. It's on a huge dip. It's perfect multi-week TA. It's in the hot sector. Perfect. I mean, I knew this was so good. I knew it was so good. So I bought in at 20,000 shares at 89, took some at 89.5, kind of expecting a dip and rip, but when it doesn't, and then it just goes right down, well, I cut it. Like, okay, I can take a 1 cent a share loss here, or hold and hope and potentially just get faked out by this or whatever and just lose 10 cents a share somehow. And, you know, it was just one of those spots I can get out for a very small $200 loss, or just potentially have it just roll against me all day and lose 2,000-3,000. I decided to take the cut. The other time that I got in, I got in really early, like really early at 91 area. Cut that at 89. Okay. Where is this? Right. Okay. So I took 40,000 shares here at 89, and I cut those when it failed to hold anything and then just dumped to new lows. I'm like, what is going on? It made no sense to me. I was very confused. So those were the plays that I took. I tried to anticipate, because everything was exploding right out the gate. I was like, okay, this is kind of a wedge, or kind of just a range play. I expected it to, I would take the 91, right, and it would just start going, and it would start to form some whatever. Just it would just work, right? Well, no, that one didn't work. It started dumping basically as soon as I bought, which is, don't even get me started with the algo lately. It's been so crazy. I feel like I'm going crazy. Like, I feel like algo is a real thing. I also feel like it makes me go crazy and think that an algo is like targeting me when really I'm just trading bad. But I absolutely think there's some very, very strange algo trading stuff going on lately. I mean, really strange. Like charts that are moving literally dependent on your buy. Like, you will buy and the chart will fail. If you don't buy, the chart wouldn't have failed. I can't explain it. I don't even have really a good comparison. Other than what, like, if you try to study a moving atom, if you try to measure the result or record it, that in and of itself changes the result of what the atom does or something. That's kind of what I feel like is going on in trading. I know it's absurd. Like, I'm actually going crazy. Kind of with yeah, just crazy. Should have kept Mark on my radar though, because it's not a big deal. Like, it holds this range all day and then it recovers that morning range that I originally wanted to break out of. So when it recovers the morning range, where am I? Where am I? Why am I not re-entering the spot? Why am I not adding here? Where am I? I don't know. I don't know. Getting too lost in everything. I'm just getting too lost in everything. And then just could have re-entered the 40 or 50,000 shares. Maybe even more. Maybe I would have taken 100,000. The point is, I lost $600 on a play that I knew had potential to run 100, 200%, and it did. It did. And because it's a large float, and because it was so liquid in the entry range, it was a very, very safe, controlled 50,000 share play that ran over $2 a share. I mean, that play alone. And again, I don't want to do that, by the way. This is the shit that I'm seeing that's making me trade bad. Like, I want to lock up reasonable gains. What is a reasonable profit? Okay? A reasonable profit is taking 50,000 shares at 88, 89, 90 and selling it at 150 to 160. 70 cents a share, that's $35,000. Who cares if it goes higher? I mean, honestly, who cares? And if you lock up 35,000, well, then guess what? You can also take advantage of some of these. You see this dip come in, okay, nice bounce. Like, okay, now it's coming back, harsh dip. Oh, that's a double bottom. Maybe you take some shares in here. Risk in this area. You just come down, it's like, oh, that looks really scary, but it holds on, and then it reverses, and maybe you take some of this momentum. And then again, really nice surge up. Okay. You can either lock it up here or just say, hey, you know what? I'm going for the curl to new highs. It holds. Curls. New highs. Lock it up for another fat win. This is what I'm saying. Like, if you trade logical and you just trade good, you can make money on the first run reasonably, and you can play this reasonably. Now, look, the market's going insane and things are running 2,000% right now. So there is a very real argument with just taking this great, amazing entry and just saying, screw it, I'm going to hold it as a swing. It wouldn't surprise me. This is the sickest thing about this. Next week, it would not surprise me if this ends up going to 7 in pre-market. And it's disgusting. It's disgusting because I had 40,000 shares at 88. I could just take the 40,000, said, whatever, I'm going to risk 85. And then potentially, I could have just woke up next week to like 400,000 of profits. But I didn't do that. I took $500 loss. Well, on the bright side, my downswing doesn't seem like anything because literally one trade knocks that downswing out. Just one good day of trading knocks that downswing out. I mean, it's how I'm trading though. Like, forget the 400,000 home run bullshit. That's what I need to forget about. That's what I need to stop giving a shit about. That's what I need to stop doing. Why am I bringing it up? Why am I doing that? So bad. Just lock up. Reasonable play. Lock it up again. I mean, what are you doing? I think in the last month I could have easily averaged $20,000 a day of profit easily for the last like 2 months straight. I didn't need to chop. I didn't need the downtrend. I didn't need to downswing. All of that. I could have avoided it all and just made 20,000 a day if I would have just locked in reasonable profits. I mean, you wouldn't believe, you would believe the stuff I'm seeing, the stuff that I'm doing. I'm being up 10, 20, 30,000 on plays all day. Like 5 plays a day, I'm up 10, 20, 30,000 and letting them come down on me for nothing. But then there's other plays that will just run forever. And I'm like, why am I not in those? I don't know. There's stuff like this. This is causing a lot of FOMO where I'm just like buying random stuff because some stuff works like this. But it's like, man, this one was kind of harder to predict. I mean, really nice, really tight candles. Like I said, look for tight is right. That'll get you precise entries with little risk. And kind of weird though, because the metal fabrication is very sold off though. It fits the hot chart pattern, which is very sold off. Been in a range for a while. And these things are exploding 2,000%. So maybe next week this goes to 10. Who knows? There's so much more. This was so just disturbing. Why did I do this? This was me. I had an awful day Friday, just awful. Because to be quite honest, if I locked in profits, I would have made 50,000. I didn't lock in profits all day, traded like crap. Ended the day down 20,000, and this was me just like fear of missing out. I wanted a big win. I just saw Mark go, from 80 cents to 280. So I'm sitting here being like, well, hold on, IMPX is 80 cents. Man, whoa, like what if this holds? Kind of does something like this and shoots up. I don't want to miss it. I took 30,000 shares here at the 99, anticipating it would kind of come back up and start a nice uptrend. And hey, if it uptrends to 150 or something, I can, or whatever, if it gets over 110 and holds, look, I can hold that in the next week and maybe it will make that $2 or $3 move. But I get in and it just breaks down, and then I get stubborn and I don't accept the fact that maybe this wasn't a good idea to chase this, and I end up selling it. Again, I had to go. So I end up dumping it at 88 because I had to go. So I dump it here. I take a $3,000 loss on that. On a play that's probably going to gap up and run next week. But the point stands, what am I doing? What am I doing trading this in after hours randomly? It's a Friday in after hours. Nothing is that good Friday in after hours anyways. I don't know. It's unnecessary. I need to walk away from the market. Because what I find, especially on red days, is I will stay after hours to try to trade more and try to recover losses. And it's so bad. It's not it. You don't want to do it. It's so bad. No. Why didn't I play these? I don't know. I don't know. Should have. I don't know. Oh, man. Perfect TA as well. I mean, to be honest, I saw him gabbing pre, and I didn't even look into him. I didn't even know it was Trump related. I didn't do the due diligence. I didn't put in the work. I mean, I didn't even bother to see what it even was. I just saw it was warrants. I saw it was a 5-letter stock that I don't. Normally, I don't play the warrants. I just stay away from them completely. Kind of unfamiliar territory, so I just kind of wrote it off. But If I would have looked more into it, I would have saw, okay, there's a big reason to watch it. Formed a clean entry there. You know, pulls back, washes some volume. You get this nice little uptrend. Gets tight. You can absolutely take this entry here, risking this. Very reasonable. Beautiful consolidation, really, into a curl. Definitely take this for a big new high of day squeeze. And again, take reasonable profits. So I should have bought this, right? These are consolidation candles. Nothing I'm gonna sell into, because especially if I was aware of, you know, Trump play, like, okay, this could have some, this could run for a while. It's so liquid. I probably would have taken 20,000 shares, around 340. Once it's up at 630, I'm locking in a $60,000 play. Okay. As it goes higher, I feel like I would probably feel awful, but I wouldn't touch it. If I'm up 60,000 and then I say, whoa, this consolidates real nice and tight, and I get back in 20,000 shares at like 590, and suddenly it's up at 790, I'm probably locking up another 40,000. If I take this double bottom, if I do end up getting involved in the 715 area for an uptrend, this spot would really scare me. I would probably cut it break even, to be honest, or small win. But as it redevelops into this even tighter curl, these are big ifs, but if I had nailed this for 40,000 and had nailed this for 60, and I'm up 100,000 on the name, well, you better believe I'm very comfortable. I'm feeling myself. I'm confident. I'm comfortable. So I'm taking another 20,000 shares here on this curl around 795 area. Okay, risking something like, the range says you should risk 772. Maybe not. It's curling. It's choppy, tight. Starts to curl. Get in 791. Add 795. Risk has to be 770. Yeah. So it's about a $5,000 risk, but if you're up 100,000 on the name, and it's this clean of a TA, what's the scale? The scale is 350, and let's just say 7. I know it goes to 750, but okay, $3 or $4. Let's be on the conservative side. Say, okay, we're gonna go for 3 a share. Lock it up here. Lock it up in this area. Would I find this? No. Would I make another 60,000? Yes. If I focus on the right plays that are hot, that have the right structure. By the way, like, that's not even talking about how absolutely clean this range entry was. This is why I'm gonna start being more open to really hot pre-market plays, because guess what? This is appropriate. This is an appropriate entry of range, of the breakout of the range, risking the support right underneath you. These are even better. This is like a 193 entry zone, risking 10 cents. That's incredible. This is incredibly clean right here. Not the most comfortable thing, but incredibly clean. Okay? This is also, you could justify it. You really could. Probably with smaller size. Well, yes, with much, much smaller size. This is, do I like this? It's a bit micro for my liking. It's reasonable. Because you are getting a very cheap price, and it's reasonable. Yeah. Other than that, I mean, you can see entry zone, entry zone, entry zone. Beautiful TA, beautiful flow, never test, low stress, nice consolidation, beautiful entry zone. The point is, if I play things reasonable and I lock up reasonable gains, I do infinitely better than if I try to just hold for a huge home run. I do so much better by just locking reasonable gains and reanalyze. Lock in reasonable gains, reanalyze. I saw this after hour structure. I didn't know. It's overextended, and I just don't know what the upside could be. And I'm feeling like crap for missing it all day. I don't take it. I don't. And when did I forget how to trade? When did I forget how to trade? It's beautiful structure. Nice entry zone. It's close to the test. Or what I mean is I could definitely see how it could curl here and then retest after hours. And if you get that, then you get another breakout. And it's like, when did I forget how to trade? If it's trading after hours and it's that liquid and the TA is that good and it's a volume wash, this is no different than an intraday entry, because that's the quality that it is. It's very high quality. The next day, right? It holds this range perfectly. It's perfect TA. Would this area potentially get me if I get in here and then cut here or cut down here? Yeah, maybe. I think more realistically though, I wouldn't take that. I think I would give it more time. Try to get an actual curl over the 2570. And you don't really get that until this area false breakdown recovery. Now it's a high attention where I'm paying very close attention. It starts to curl up. And this is when I take that curl at 2570. Right? And look, I don't feel bad that I didn't play that because I didn't nail anything else before it. If you play a stock excellently before it, you have a ton of confidence. You have a very, very large bundle of cash, of profit. So no matter really what happens in the spot, you can feel pretty good because you're up, in my case, be up like 6 figures on this. So yeah, you can absolutely keep playing. Hey, it's still front side. It's still excellent. You take it again. So I will always say, and it's very obvious, why in the world would anybody get squeezed on this? Anybody that, and I'm sure like people that have watched the front side and back side video, we all understand this was only front side. It never even gave a hint that it might be backside. Ever. Look at the range. This is the range. Does a pullback ever go? Does it ever test or go below the range? No. Does it ever test or go below the range? No. Does it ever test or go below the range? No. Does it ever test or go below the range? No. Does it ever test or go below the range? No. Does it ever test or go below the range? No. That's all it comes down to. Nobody should have gotten squeezed on this. I mean, it literally never started backside, ever. Now, I'll tell you what you can do. when it gets this like stupidly overextended, look at these candles. They're not controlled candles anymore. This is what happens when things get overextended. So when something goes from $80 down to 50, now you know it's unstable and you know this TA is broken because that's disgusting. So what you can end up doing is when it bounces back to this area, you now have a good risk reward situation where you can risk the high of day and you can start shorting basically this major resistance, because once it breaks down like this is now major resistance. So this is where you want to start shorting right here, anticipating that it's going to bounce, right? It's going to have a fat bounce back to what is now major resistance. It's going to get rejected because it just went from 2 to 80, right? Like, what? 2 to 80, and it just broke. It broke. And when I say broke, what I'm really trying to explain is this. What I said before, over and over and over, it made good TA, it went up, and it didn't retest. What happened here? It not only retested the range, it broke under the range. That's your confirmation that this is done. Backside is basically going to come in and is now a safe spot to even start considering shorting, right? The only time you should ever even consider shorting this was right here, because this is your confirmation, the green light, so to speak, for shorting. So what do? You simply wait for the bounce back to resistance, and this is the zone you start shorting. You risk the recovery of the range. You don't even need to risk new high of day. You could really just say, okay, if it gets back into this range and holds, and starts to curl, like, get out, right? But then you have a risk reward situation again where you're getting in around 70 as your literal first short entry on this entire play, this entire frontside run. This is your first short entry at 70. That is the first time it gave reasonable confirmation, in my opinion. Now, did it have a harsh crack here? Yes. But you gotta understand, the range was this 2780. It held this range and it got super pumped over that range. It never went back down to that range, and that's what is important. Whereas in this, it did go back down to the range, had a very hard crack, and went below a reasonable range. That's why shorting the bounce becomes good risk reward. Could it have definitely held here and then surged up? Yeah, but at least you're risking $5 to potentially go for that all-day trend. Because when things start backside, they really do just downtrend all day if you nail the backside. You're risking $5 to make $45. That is a great risk reward ratio for your first attempt at shorting this. Shorting isn't dangerous if you know how to do it correctly, but here's why I will never short. I just decided I'm not shorting. I will never short. I don't care. I just don't care. I will never short, because if I short something like this and anything goes wrong, any technical issue with my broker, if my power goes out, if anything, I understand that, I can have backups on my phone and all this stuff, but like, if anything just goes wrong and you lose the power to cover your short, then potentially it can just run all day on you. And I know that's probably just a ridiculous extreme that's stupid to bring up, because there's backups, there's all these things to make that not happen, but why? Just why? I mean, No, I don't know. It's just scary. It's like if I start to short something and anything goes wrong, and I'm just dumb, so I think of these things. I'm dumb in the sense that like I don't even think that's realistic that that would ever happen. Or maybe for people that short, can you probably just set up your orders to just automatically cover, like, so you would short with like an auto cover at a defined price, and that would just be automatic, like as a stop out. I mean, I don't know. I'm sure there's a solution. I don't know. I just see things go from 2 to 80, and it's like it's kind of just a wake up call. Like, oh yeah, that's why I don't ever want to short. If you don't have the option to short, you'll never have the option to screw up this hard and potentially lose your life savings in one day. If you short, you can do that. I saw a picture of somebody, like somebody on Wall Street Bets. I mean, they're down. They lost like 900,000, or they're negative 900,000. So now they literally are in debt. 900,000. They ruined their life. I mean, they ruined their financial life from shorting. And yeah, shorting's crazy. Like I wouldn't even consider. I'm paranoid. I wouldn't even consider shorting though for your first 5 years in this game. 5 years of experience, and then maybe think about shorting. I mean, this. I don't know. I don't know. Oh, I should also mention I'm strongly against buying this as a bounce, because maybe not. Maybe not. I mean, this is reasonable. This is reasonable for a bounce play, but with this chop, it's so easy to just go in and out a bunch and get like really beat up. But I mean, this is reasonable. It's reasonable to take this as a bounce. There's just a level of unpredictability that's going to happen when something starts backside. It has to be reasonable though. This dip is huge. It's a huge dip. It's at former support. Yeah. No, this was reasonable. Yeah. God, I gotta start trading better. Alright. Yeah. What else can I go over? This was painful. Yeah, this was painful. BCYP. So first off, I want to say these shell companies are doing very weird things, and I've noticed the charts look like this, and then they kind of get some trading and then go crazy moves. Like look at BENE for a second. It's a shell company. It did the same thing, same chart, and it went from that 10 to 19. Very nice move. And it was very choppy and unpredictable, but hey, if you just hold on and hold for the whatever, just hold for the trend or whatever, it exploded, right? And if you look at being the warrant of the stock, it's basically the same move, but it's it's higher percent because they started at a lower price and they have crazy volatility. So I chose to play BCYP warrant because I wanted a higher percent gain. And something to note, okay, it goes from 80 cents to 5.50. Now, if you look at BCYP, if you look at BCYPW, right, it was hovering this range for basically all day. I got in here. I got 25,000 shares at 164. Look, if there's any day to go for a home run, it's on a day where everything is running 2, 3, 4, 500% and above. I mean, if there's any day, right, it would have been Friday, right? I mean, everything's running. Everything. Huge moves, 200% is almost like your average runner. It's like, so I buy into BCYP. And I say, okay, I'm gonna go for the move to 5. Everything's going insane. Like, I'm just gonna hold it and go for 5. I'm gonna go for $4 a share. I'm going to go for the $100,000 win. You know, I was already aware of what BENE did. I was aware that BENEW made the same move from the 160s to the 550. I'm like, this is the same thing. I mean, it's got the same long-term chart, basically. It's got this curl late day run. It's gonna just broke out a new high of day. It's gonna go into a halt. It's gonna keep trending. It's gonna be great, right? But it didn't. It failed. It didn't do it. It failed. I'm just sitting here scratching my head, like, when am I gonna find the one that does what I want? You know, like, why do I buy this? And this one fails. But the ones I'm not in are going 3, 4, 500%. It gets frustrating, and it kind of makes you lose your mind a bit. But the point is, when it started to fail, I don't mind holding through this, because look, these things have been doing crazy things where it will wash to the support, it'll bounce back, and then it'll surge up, retest, and then break out. This one tried, it got sucked back down, it started to fail, which means it's a cut, which means, why am I not cutting here? I should have cut here. I could have got out in the 180s. I could have locked up $5,000 of profit here. But I can't accept, like, I have a huge entry at a very good price on a good setup that has been known to run to 5, or just multiple dollars, and I'm sitting here like, I just can't accept this opportunity that I've put myself in. I can't accept that it's not going to work. It's like, it was so lucky to begin with that I even caught this amazing entry. It's like, it was almost like a lottery in and of itself that I got this lucky to get the shares at that price. And now you're telling me it's not going to work and I have to let it go? That is what I'm having trouble with. But I have to. It confirmed the bounce is failing. Some of the plays don't work, and I could have locked up 5,000 there on a failed play. That's great, right? I got stubborn and I didn't want to accept reality. I ended up cutting because it just fell so fast and there was no support, and I ended up taking a $5,000 loss. I took a $5,000 loss on something that peak upside I was up like $22,000 on. Now, this was not realistic. The surge happened so fast. And quite frankly, because they are running to $5, $6, like, there's no reason to sell here. Because, I mean, statistically, I think it was a hold. I just think once it fails and confirms the bounce is weak, somewhere along the lines, I forgot how important it is to stay logical and cut when you have to cut. This was a cut. I held on for a $5,000 loss. That's absurd. That is disturbing. Same situation as Grom. Grom not only Grom on Friday, but Grom on Thursday when I took that $9,000 loss. It didn't need to be a loss. It could have been a win. Could have been a win when it showed it was weak. Grom could have been a bigger win on Friday once it showed it was weak. I'm just hanging on because I want to be a part of the next big thing, but that's not how I trade. That's not what I'm good at. That's not how I trade. I gotta lock in the profits. I'm not even gonna say I should have locked it in here. I'm not. It was so close to being like exact to BENE. I'm not gonna say that, but I will say I should have locked up 5,000. That was bad. That was really bad. Jeez. I suppose I have to go over this. LMFA, some nice plays, especially on this day off the bounce. Bounces back into the range, holds all day, starts to curl. I take it, get a nice curl. That was a great trade. Consolidates. I just kind of chop around with it. Took some feeler bets, I think, but ended up just chopping around, probably break even. On this day, though, it's a third day surge where you get that 1 day hold, 2 day hold, third day for continuation. I'm anticipating it's going to retest the high and then fit scale. And the reason why I say this is because, look, we're in a market where I'm seeing things for multi-day breakouts and then go up 2, 3, 4, 5, 6, 7, 8, 9, 10x, right? So now you're telling me that LMFA, a play that is super, super sold off, a play that is a massive former runner capable of going from 4 to 11 in 1 day, a stock that is making a multi-year curl as a breakout on one of the hottest market environments that I've seen in months with the recent action, and you're telling me that this can't shoot up and find a parabolic move on a day that it's testing the day one move, which, by the way, the scale of that is 350 to 720. Just call it $4. Call it 350 a share. So if it breaks out, I'm thinking it can go 350 a share. This can go to 10. You give all the other factors about how hot the market is, how everything is just so great. Everything was going great. Everything was going well. It needed to hold this trend. And then continue. But it failed, and it got weak, and it got sucked back down into range. But with the stock, it's so choppy. It recovers so randomly and sporadically. I just felt like, no. Like, I felt like, whatever, I'm going to hold on. It'll be fine. Man, what am I doing? Look, this was really the last thing. Like, once it goes into a descending trend, it breaks out of it here. That's great, okay? And I knew it would probably do some weird stuff where it would pull back and then maybe hold this support from the morning. And then it would break out of that, but it would shoot back up into the range and then have a, hold and have a late day move and push to that bigger parabolic to 850 or 950. But it didn't happen, and the facts are the facts. The facts are, it tries, but it gets weak and gets sucked back down. I have to cut it here. I don't know when I stopped being logical when it comes to cutting logically, but I've lost it. And I need to get back to it. And analyzing things like I am right now is important. This is a must cut. It's weak. It's weak. I have to cut it. I have to cut it here in the 695 area. If you want to know what my position was, it was 30,000 shares at 636 average. Yeah, 30,000 shares at 636 average. So if I would have cut it logically, let's just say 695, 636. It would have been $17,700 for a reasonable cut on failure. Could I have sold it here for a $30,000 win? Yes, I could have. I could have locked up $30,000 on one of the hottest markets I've seen in months, on a perfect multi-year breakout, on a perfect multi-day breakout. No, I'm not going for that because I truly believed it could go to 10. And if it goes to 10, if it parabolically goes up and goes into a halt, and if it goes to 10 on a healthy uptrend, then I make $120,000 on this trade. And it seems like half the stocks are doing that, but the stocks that I'm in, they're just not. They're just not. They're getting weak. They're coming down. And I'm hoping, you know. It hurts to know. The reality sinks in that no, you're not going to get $120,000 like massive play. This is weak and this is not going to work. And my brain doesn't want to accept that, especially when I am seeing things like PHUN and BENE and Mark and DWAC, and I'm seeing all this crazy stuff. You know, not even go 40 or 50%. No. 500. 2, 3, 4, 500%. And here LMFA is struggling to go 10% on a perfect multi-year, perfect multi-week breakout. You know, it's easy to look at this and say, yeah, you should have just locked it up for 30,000. I don't think so. I strongly believe that wasn't the right thing to do. But I do believe locking up 17,000 here was. Okay. A little disturbed by how I played it because I sold it here. I locked up $5,000. By the way, I let it go all the way down to my entry. If this cracked and went lower, I could have taken a massive loss on a play that I was up at one point $30,000. This is disturbing. This is really bad and disturbing. This is pitiful. This is some of the worst trading I've ever done. Why it's happening? It's obviously because I'm letting big movers get to my head, and I want to be part of them too, but I'm not accepting the reality when the reality shows they're not going to be the big movers. And instead of just cutting for $17,000 and moving on with my life and focusing on better plays, and being more mentally stable and secure and locking up gains along the way as my day goes on, instead of doing that, I'm just holding and hoping that this is gonna somehow come back, somehow momentum will re-enter and it'll be saved but no, that's not how hot plays work. Hot plays hold front side, they hold healthy bullish trends, and they keep forming and going higher, forming and going higher, forming and going higher. They don't do this. They don't try to come back and then come back down and then come back, and no. It's very rare that they get this weak and crappy. and come back. I mean, they're over. It's time to get out, reevaluate another day or maybe later in the day. But this never formed a reanalysis because it got so bad. I didn't need to be involved in this. I could have just got out and moved on with my life. So you can clearly see what I'm doing wrong. I'm not cutting when I should. Wafu. Okay. Oh, stock straight crashing on me. Go over Wafu real quick. Then I gotta go. But look, I mean, I think for a while at least, a lot of my videos will be a bit doom and gloom, so to speak, because look, I haven't done enough studying and I haven't reviewed enough, and that is why my results are so poor. That's why, as I catch up, so to speak, and catch up on my review and talking about these spots and things, it will be a lot of doom and gloom because I have to catch up on all of that review of all of the mistakes that I've done. And by not reviewing for so long, my mistakes have only gotten worse and my discipline has only gotten worse. So now it's time to catch up, right? It hurts. I gotta take responsibility for it though. So that's gonna be some doom and gloom type videos. You know, as I just go over the harsh mistakes and the harsh realities of my trading. So, my thesis on Wafu has basically been, it's an explosive form of runner. It's capable of making insane moves. It is pretty pump and dumpy, and it is very strange, awful price action. That I really hate this stock, and I will never play it again. At this point, I'm just totally done with it, and fed up with it, really. Okay, so EEIQ. They kind of run together, or they used to. EEIQ made a very huge move from like 4 to 11, and I really thought that Wafu would eventually follow suit, and you get this beautiful multi-month development. I mean, this is A+ quality. You can't get better quality than that in trading. You really cannot. This is just a multi-month trend. You get this micro multi-month, multi-week, big former runner, kind of a hot sector. Oh, wait, no, this sector sucks. But it is a China stock and EIQ is hot, and that was the same sector. So I thought there was a lot of different factors that made this an excellent, excellent trade idea. So now we look at the recent move. Now here's the thing. I had seen this perk, and I said, okay, because I analyzed this perk, and that's when I saw the long-term chart thesis and was like, wow, so good. Day 2 consolidated. Now look at day 3. It's a day 3 surge setup on a multi-month breakout setup. Get some perking activity in here. I may have taken a starter here. I may have not. I'm not sure. I'm almost certain I did take it in here because I didn't want to miss it, but I also knew I had to risk, you know, the key support, which was kind of like the 630 area. What was my play? What was it? I'm mistaken. No, I didn't take it here. Wait, did I? Crap. Oh, I might be able to look it up. I guess there is a use for this. Oops. Wait. No, that's fine. Oh my. Ooh. Yikes. Yikes. Whatever. 5-minute chart works. Okay, well, I took a lot of shares. 650 area. What was that? 11:10 a.m. 11:10 a.m. Interesting. That's very interesting. Wow, I nailed that. My first entry was actually right here at 650. Um, yeah, basically just risking 630. What else? I took a lot of shares. No, I just bought this and I bought this. I bought this. Just, yeah. I even took an ad. Okay. Okay, a little out there. A little out there with the ad. I'm not sure about that. I think basically I was in 15,000 shares and I just decided to go ahead, add a partial 5,000, one fourth position at that higher price point. Again, I mean, I'm thinking if it does the multi month breakout, this thing has a history of going $2-3 a share minimum. I'm gonna go for $2 a share. So what ends up happening is I have 20,000 shares from 674. 20,000. If I had put a sitting limit at 774, I probably would have gotten out, to be honest. I probably would have gotten out. And it would have been a $20,000 win. 20,000. What ends up happening gets sucked back down, it gets weak, and instead of saying like, wow, I guess it's over, because you can feel when things are very weak, and honestly, this market's just weird. Once the top comes in and it comes down, again, it happens so fast, but once it finds the top, if you don't catch it, you'll never get it back. So setting limits are very important, and just reasonable price points are very important right now. Or just locking in partials. Like, I should have just sold half. I should have sold half and let half run. But I didn't. Then it gets weak and I have 20,000 shares and I'm attached to my position because I love the multi-month. And I'm sitting here like, okay, like, what? I guess I'm swinging it. I literally swung 20,000 shares of Wafu from 673. And I swung that overnight. This is probably one of the worst things I've ever done in my career. It definitely ranks up there. This is one of the worst things I've ever done. The next day, it uptrends to 740, and I have a shot to lock in some profits. I have a shot, an opportunity to redeem myself and lock in some reasonable profits, and I don't. I end up selling it all at 640. I took a $6,000 loss on something that I was peak upside. I was up $20,000 on it. This has been happening to me so often. And that's why I say forget long-term TA analysis. Just forget it. Forget what the chart has done in the past. Forget what you think it can do. Forget it. Lock up your gains based on the dollar amount. Lock up the 10 or 20,000 and then reevaluate it. If it gets good again, you can literally just take it again for another 10 or 20,000. This is a market where you lock in gains and you reevaluate after the chop, so you can see what's safe again. So you protect all of your capital, you protect yourself from going red on the trade, which is nice. And then if it does end up holding and redeveloping, you have another opportunity to just take another great trade. I mean, this is not the market for home runs. And it makes no sense because you see home runs over and over and over. Intraday though, like intraday kind of momentum continuation type plays, you do not want to hold for home runs. The home runs are really appearing as perks and developing into swings. They're more like swing trades is what you want to go for the home runs. You can analyze PHUN for that. You can analyze DWAC for that. But in the middle of the day, you want to just take the play, lock in the gains, and reevaluate. And that's really what I want to try to do. I'm just done. I'm done. Like, I'm done being up $20,000-$30,000 on a regular basis and then taking $5,000 losses. Yeah, no, I'm done with that. I gotta start getting consistent, and based on all the mistakes just from Friday, and honestly every day I have mistakes like this, I mean, it makes me feel disgusted with myself, but it also makes me feel good. It makes me feel pretty good that this downswing that I'm on shouldn't even be a thing. I mean, it's so easily recoverable and fixable. Like, I can fix this so easily. I just need to lock in reasonable profits again. Yeah, at this point, I mean, I hate to make the comparison, but it really is kind of like an addict, kind of. An addict knows they need to get clean, but they won't get clean until they truly go within themselves and want it for themselves. And until they're ready, they're not going to get clean. I feel like I've kind of gotten addicted to trading for the big wins. And, yeah. Yep. That is pretty much what it is. Pretty much an addiction, I think. But, as an addict, I'm about ready, I'm about ready to make the change and start locking in profits again, reasonably. And trade for consistency, not for thrill, I guess. So, yeah. It's an easy fix. It really is. It's an easy fix. The results will follow. I just gotta want it. I gotta want it bad enough. And I think I want it. I think I want it bad enough at this point to start adjusting. So yeah, I mean, that's all it comes down to. You gotta stop trying to make $500,000 in one trade. Chill out. I'm on a downswing. My job is to get consistent, make the downswing back, and get to new highs. And I can only achieve that at this point from locking in my profits. And I can literally achieve this in probably a week or two easily if I just lock in profits. That's it. And I can do that, and I think I will, because I am ready for it. I'm ready to go back to that. I really am. We'll see. I think that's about it. I mean, I never talk this much ever. My voice is actually going out from 2 hours and 40 minutes of talking, and my voice is like going out. So yeah, I don't really talk too much. Yeah, I mean, more videos to come. I can go over like psychology video over why I think downswing started and all that, but oh. Yeah, being open about trading is hard. The more successful you get, it becomes harder to be open about it because I feel like lately, if I share things, I almost feel like people come at me with like, like shut up, like you're being a brat, you're a spoiled brat, shut up. Like that's basically how I feel like people kind of view me now. Um, some people, like whenever I bring up any sort of struggle or bring up context, like when I share a $6,000 Green Day or something, but then I share the context, like, look, trading's great and all. You can make a lot of money in one day. So 6,000 is a great win. It's very nice, but the context of this Green Day, when you're talking about my results, was at the time I'm coming off of $120,000 downswing. So I had lost $120,000 before I made the 6,000. So just letting everybody know the context behind this matters. And then I was just confused when of all people, Tim Sykes, comments like, I don't even know. Like, I don't know, something along the lines like, don't you realize that's like a monthly paycheck for the majority of people? Like, basically calling me a spoiled brat without calling me a spoiled brat. It's like, come on. Of all people, Tim, you should know that salary comparison, there's just no place for it in trading. There really isn't. There just isn't. I mean, what is salary comparison in trading other than a marketing tool? I mean, there's no place for it. There really isn't. It just brings the wrong idea behind trading, and it gets people into trading that just focus on the money. Like, by me sharing the context of what happened before the Green Day, I'm being transparent, I'm being honest. Everybody's about the truth, transparent this, transparent that, but you get to a certain level of success and you keep trying to be transparent and honest. At a certain point, it changes in people's minds and they kind of just want you to shut up and they don't want you to be honest anymore. I don't really know why though. And all the things that they preach, like you shouldn't think about the money, you should just trade and make good trades, right? You shouldn't focus on the money. Well, literally by them essentially shaming me for, sharing context behind a Green Day. They're caring about the money and they're not caring about the results behind the money. Like, I can't even explain it. It's just so bad to bring up salaries and trading. I even from day one, when I was brand new in 2017, even when I was brand new, I mean, I knew that's just something you should not do. It's something that's not, no. Talk about trading, about your results. What is this money in context to your current or recent results? That's it. People that work on salary, they're playing a different game. That's like if we're all playing basketball and somebody comes in, it's like, oh, you just shot 30 points playing basketball. Like, you should really play soccer. Those guys only score like 2 or 3 goals a game, man. Like, you scored 30 here. You should play soccer. Like, think about how dumb that sounds and is. It's ridiculous. But that is how I view people that bring up salary in trading. That's how I view them. I'm sorry, but that's just how I view them. It's so illogical. You're trying to compare a totally different game to a totally different game. There's no comparison. We take more risk. It is what it is. We can lose a lot of money, and if you work on salary, you won't. You'll show up and you'll get your salary pay. I don't have to explain it. I think most people get it. It's not a fair comparison. It's not something you should ever compare. Trading results are totally different. Don't compare them. Don't compare them to salary, ever. It's not fair, really. It's not fair to people that work on salary. I just feel like there's nothing wrong with salary. There's nothing. There are people that are made for salary. They love it. They find something they enjoy. They love it. They like the stability. They like it. They don't want anything that's not salary. And I feel like when you talk about how much more you're making than people on salary, it's one, it's kind of showboating, and two, when you take a big red day, well, can those people on salary come out and say, hey, like, you don't work on salary, like, fuck you. Like, no, they can't do that. They can't really defend themselves like that, because most people that take red days, they don't share that. So I just don't think it's fair to, like, showboat it and then essentially talk like you're better than anybody on salary, and we're not. We're not. We just choose to play a different game. And that's okay. It's not better or worse. You gotta find what you want in life. I want to play this game, so I'm going to talk about this game. I'm not going to talk about the other game. You're interested in the other game, play the other game. Don't bring it into this game. That's my thoughts on that. That's just... I just had a little rant here at the end. Wow, little rant. I don't know, it just frustrated me, but I do appreciate Tim calling me out. Calling me undisciplined, stuff, like, yeah, I do appreciate that, because that's important. It's important to get called out when you deserve it. I've called multiple traders out, especially people that I've helped, because then you feel like you're invested in their success because you did take the time to help them. And so if for a long period of time they're saying the same things over and over and saying what they got to do but not doing it and making these silly mistakes, then yeah, it's like I'll call them out and be like, yo, come on, get it together. You got to get this together. You keep doing this. You're doing this bad. You got to get it together. And I really appreciated that, Tim, I'm not being disciplined, and yeah, he called me out. It was good. Because I've been saying the same thing for weeks about how I need to lock in profits and how my discipline's lacking and how, like, I need to size down and all these things. I'm not doing it. So it was important to get called out by somebody. So that was very good. I just don't like the salary comparison, Tim. Come on. Oh, no. IRNT software hot sector used to be 48. Now it went all the way down to 9. Had a very large bounce to 1150. I was like, wow, I missed that. That sucked. But even though I missed that, look at that day 2 consolidation. Pulled back that support, held, consolidated. So on day 3, I'm looking for a day 3 surge. Kind of sort of this thing where it's like, okay, it's in this channel, but if it can hold and start curling, it could eventually break out of the channel, could retest, and then break out of that. I was thinking it was going to break out of that and go to 1250. Reasonable thing to think. Very, very reasonable thing to think. So I got in in this area, and I got in big. How many shares? 20,000 shares at 1068. Curled right away for me. Held for the trend. I got this really nice parabolic move up. And I wanted to be a betting man and bet that it would not only test the highs, but it would hold and then retest and then break out. The only problem is it didn't hold a reasonable range. If it was meant to do that, it would have held a reasonable range. It got sucked back down right away and it felt incredibly bearish. And instead of accepting the fact that this is not going to be a home run and locking up reasonable profits, I could have locked up reasonable profits in the 1130 to 1120 range easily. So let's just average that and call it 1115. That's $9,400 on a failed play. Because, I mean, it didn't get to my goal or my expectation. But that's a reasonable cut on weakness. And it would have been $9,000. You know where I sold it? I sold it. Where did I sell it? Here. I sold it here. And I even take it back. My average was 1073. My average was 1073 and I cut it at 1065. I took a $1,600 loss on a play that I could have easily locked up $9,000 on weakness. And if I would have just locked up a reasonable gain at 1150 or something, well, okay, you're looking at a $15,000 play. I don't feel, again, like, I just don't feel bad about that, though. I don't feel bad about that, especially because on this day, it was able to run quite a nice run, 70 cents. It held a range, and then it went, an additional $1.50. I don't know. I don't feel bad about that. It could have held a reasonable range and continued. It could have. So, again, with a lot of these plays that you see, I'm not mad I didn't get the perfect sell. I'm mad I don't sell on confirmation of weakness, right? I'm being stubborn when the facts are being presented that no, this is not going to be a home run. This is actually weak, and you need to get out. I'm not taking those facts and acting on them. I'm ignoring them. That's pretty much it. That is it. Yeah. I'm just mad I'm not cutting when I need to cut, essentially. That's it. That was brutal. You wouldn't believe how many of these happen to me every day. It's just brutal. Alright, that's about it. Alright, I'm all talked out. It's about a 3-hour video. More videos to come eventually. Like, I know I need to make more content because it helps me. Yeah. It helps me stay sharp, and look what happens when I don't put in the work. Like, me making these videos is literally me putting in study time, and when I'm not putting in study time, what do you know? My results greatly suffer. Alright, see you later. Thanks for watching.